Affirm Holdings was founded in 2012 and headquartered in San Francisco, California. It's a prominent company in the financial technology sector known for its digital and mobile-first commerce platforms. The company offers a point-of-sale payment solution that allows consumers to finance purchases over time, and it also provides merchant commerce solutions and consumer-focused app. Affirm's business model involves partnerships with various companies such as Stripe in order to make adaptive checkout service available to Stripe users in the US. They also launched a partnership with Amazon in Canada, and their payment network as of late 2023 included notable partners like American Airlines, Cathay Pacific, and Bookings.com. Financially, Affirm has shown significant growth. As of early 2024, the company's stock price was around $45.30, with a market capitalization of $10.4 billion and a revenue of $1.6 billion for the fiscal year of 2023. They also reported serving 16.9 million customers, over 266,000 merchants. In terms of challenges, in February 2023, they announced a layoff of 19% of their workforce and closure of their crypto unit. They also had to address concerns from the Consumer Financial Protection Bureau about the lack of information in the BNPL model, the buy now, pay later space, by partnering with FICO to create a BNPL credit scoring model. In terms of Affirm's business model, they first partner with merchants. Affirm partners with merchants, integrating its payment system into the online or physical stores. When customers shop at these stores, they have the option to use Affirm at checkout to finance their purchase. Then comes a credit decisioning process where Affirm uses proprietary algorithms to assess the credit worthiness of the consumer in real time. The process considers various data points beyond traditional credit scores, such as time of day of purchase and consumers' history of transactions with Affirm. Affirm generates revenue primarily through two streams. First, they earn commissions from merchants for each transaction processed through their system. This commission can be as high as 12.5%. Second, they make money by charging interest on loans to consumers. The interest rates vary depending on the consumer and merchant, but typically range from 10% to 36%. It's important to note that Affirm states it doesn't charge late fees or compound interest. In terms of the consumer repayment process, consumers repay the loan to Affirm according to agreed upon schedule, which can be range from short-term, like weeks, to long-term, up to 48 months. Affirm offers both interest-bearing and interest-free loans, depending on the terms set with each merchant. So, how is Affirm different from traditional credit cards? First, we have their payment structure. Affirm offers fixed installment payment plans for purchases, allowing consumers to pay for an item over a set period, typically ranging from a few weeks to a few years. These contrast with credit cards, which offer a revolving line of credit with a minimum monthly payments and option to carry out balance indefinitely. The next difference is in interest and fees. While both Affirm and credit cards can charge interest, Affirm's interest is often fixed and disclosed upfront, with some plans offering 0% interest. Affirm also claims to have no hidden fees, such as late fees, in contrast to credit cards, which often have variable interest rates and can include various fees like annual fees, late payment fees, and over-limit fees. The last big difference is in the approval process. Affirm conducts a soft credit check and doesn't impact your credit score when you apply for a loan at the point of sale. Traditional credit cards typically require a hard credit check when you apply, which can temporarily lower your credit score. Here's an example showcasing this difference. For example, if you're trying to buy a $1,000 laptop, using Affirm at checkout, you select Affirm as your payment option. Affirm approves you for the loan and offers several repayment plans. For instance, pay $250 every month for 4 months at 0% interest, or pay $85 per month for 12 months at 10% interest. You choose one of these plans, and this way you know exactly how much you will pay each month and for how long. In contrast, when you are using a credit card to make this purchase, you are still charged $1,000 for the laptop to your credit card. Your credit card has an APR of 15%, and you have the flexibility to choose how much to pay each month with a minimum payment required. For example, if you pay the minimum payment of $25, it will take you much longer to pay off due to the interest accrued, increasing the total cost. And if you decide to pay $250 monthly, you'll pay off much faster, but there's still additional interest accrued during this time. Here's a brief overview about Affirm's history. Founded in 2012 by Max Levchin, Nathan Gettings, Jeffrey Katitz, and Alex Rampel, Levchin was a co-founder of PayPal, aimed to create a more transparent and consumer-friendly alternative to traditional credit cards and banking system. The idea was offered to a service that allows consumers to make purchases and pay for them over time without hidden fees and compounded interests, which are often associated with credit cards. Affirm initially started as part of Levchin's startup incubator HVF, Hard, Valuable, and Fun, focused on developing products that leverage data to solve complex problems. Affirm's first product was a point-of-sale solution allowing consumers to obtain instant financing for purchases through simple, quick loans with clear and straightforward terms. Over the years, Affirm grew rapidly, partnering with various retailers across multiple sectors. The company's success lies in its transparent pricing model and user-friendly experience, which appealed to both consumers and merchants. They provided consumers with immediate purchasing power and merchants with a tool to increase sales and customer loyalty. Affirm went public in January 2021, debuting on the Nasdaq under the ticker symbol AFRM. Since then, the company has continued to expand its services and partnerships, including significant collaborations with large retailers and e-commerce platforms. Affirm has actively been working on expanding its services and collaborations to offer more flexible payment options to consumers. One of these collaborations, including developments, includes teaming up with Google Pay to provide their payment options to merchants and consumers using Google Pay for online checkouts in the US, set to begin in Q1 of the calendar year 2024. Furthermore, Affirm has expanded its services with Walmart, bringing its pay over time option to self-checkout kiosks at over 4,500 Walmart stores across the US. Here's a brief overview of Affirm's financials. First, in terms of revenue, Affirm reported a revenue of $496.55 million, which is a 37.31% increase year over year. Affirm's net profit margin is negative 34.6%. This metric tells us that the company is currently not profitable, with its operating income reported at negative $207.78 million, a 27.72% increase year over year. This figure is also negative, showing an operating loss.